Ethereum is once again grabbing headlines worldwide, and for good reason. Imagine waking up to see Ethereum, the world's second-largest cryptocurrency, smashing through a resistance level that had held for over 3 months. This has triggered a surge of excitement and debate among traders, investors, and technologists. So, what exactly is fueling this rally? Why now? And is Ethereum about to enter a new era? To understand the significance, let's rewind to Ethereum's origins. Over a decade ago, Vitalik Buterin and collaborators like Gavin Wood, Charles Hoskinson, Anthony DiIorio, and Joseph Lubin envisioned a blockchain that went beyond simple currency transfers. In 2013, Buterin's white paper proposed smart contracts, self-executing agreements on a programmable blockchain. Ethereum went live in July 2015, setting the stage for decentralized applications and sparking the rise of decentralized finance, or DeFi, which now transforms financial systems globally. Since launch, Ethereum has never stopped evolving. Key upgrades have driven its growth. The merge in September 2022 shifted Ethereum from energy-intensive proof-of-work to eco-friendly proof-of-stake, slashing energy use by nearly 99.95% and silencing many environmental critics. Later, the Shanghai and Dencun upgrades, in 2023 and 2024, tackled high transaction fees and congestion, making Ethereum more affordable and usable. In 2025, the Pectra upgrade arrived in May, doubling Ethereum's blob transaction capacity for faster, more parallel processing. It also enabled users to pay transaction fees with stablecoins, not just Ether, making the network more user-friendly. Validator staking limits jumped from 32 Ether to 2,048 Ether, letting major institutions help secure the network and earn rewards at scale. With these upgrades, Ethereum's throughput now reaches about 142 transactions per second, nearly double that of many traditional payment networks. But cutting-edge technology is only half the story. The real engine behind Ethereum's rally is an unprecedented wave of institutional investment and mainstream adoption. BlackRock, the world's largest asset manager, has funneled over $1 billion into Ethereum-linked funds via its BUIDL product. Giants like Fidelity and Grayscale have expanded their Ethereum offerings, with pension funds and hedge funds joining in. This isn't a trickle, it's a flood of institutional capital, signaling deep confidence in Ethereum's long-term future. On-chain data shows the impact. Since mid-March, wallets holding between 1,000 and 10,000 Ether have risen by over 5%. More strikingly, wallets holding between 10,000 and 100,000 Ether have surged by nearly 29%. This means large players, often called whales, are accumulating Ethereum, a trend that usually comes before major price moves, since these investors have access to better information and longer timeframes. Trading activity has exploded. On June 10th, over 560,000 Ether, worth more than $1.5 billion, changed hands, making it one of Ethereum's busiest days ever. At the same time, Ether futures open interest hit nearly $40 billion, showing that sophisticated traders are making major bets on Ethereum's future. Crypto analyst CryptoBullet says, a breakout above the 50-day moving average could ignite a rally toward $3,500, driven by technical momentum and institutional inflows. When technical breakouts align with real-world adoption, multi-month bull runs often follow. Still, not everyone is convinced. Some analysts warn that despite this breakout, Ethereum's long-term trend is still in flux. The crypto market is famously volatile, and rapid gains can reverse quickly. Ethereum also faces stiff competition. Blockchains like Solana are pushing for 100,000 transactions per second, far beyond Ethereum's current speed. If Ethereum's scaling lags, nimble rivals could lure users and capital, especially in DeFi. Regulation is another big factor. Governments are still figuring out how to oversee cryptocurrencies. But recent comments from SEC Chair Paul Atkins have reassured investors. Staking and wallet development are currently outside securities law in the United States. This rare clarity is a boost for both developers and investors, reducing the risk of sudden crackdowns. However, regulations can change fast. New leaders, economic shocks, or security incidents could shift the landscape overnight. Security is always a concern. Trust in crypto can evaporate instantly if a vulnerability is exploited. The Ethereum Foundation's trillion-dollar security initiative aims to harden the network through code audits, bug bounties, and partnerships with ethical hackers. With over 34 million Ether, almost 30% of the total supply, now staked, the incentive for attackers grows. The race between defenders and would-be attackers is constant. Let's also remember the global economic backdrop. Interest rates, central bank policies, and geopolitical tensions all affect investor sentiment. Some analysts believe that Bitcoin, Ethereum's older sibling, could reach $150,000 if the Federal Reserve signals a rate cut, an event that could also boost Ethereum and the whole crypto market. So, what's next for Ethereum? Is this the start of a lasting bull market or just a pause before the next downturn? On the optimistic side, Ethereum's dominance in DeFi and asset tokenization could keep rising. The Pectra upgrades improvements, better transaction scaling, stablecoin gas payments, higher staking limits, reduce friction, and make Ethereum more attractive to developers and institutions. If scaling solutions like rollups, sharding, and restaking deliver, activity and capital inflows could surge. Experts predict Ethereum could approach $6,700 by the end of 2025. Other forecasts suggest targets near $6,000 or even $12,000 by the end of the decade. But competition is heating up. Solana's upcoming upgrades target 100,000 transactions per second, enabling real-time trading and microtransactions at a scale Ethereum hasn't reached. Blockchains like Avalanche, Near, and Cardano are innovating with encrypted mempools and new consensus models. If Ethereum's upgrades stall or user experience lags, these rivals could seize market share, especially among dApp developers. Regulatory clarity has improved, but remains fragile. The SEC's stance on staking reassures many, but sudden policy changes or enforcement outside the United States could still spook markets. The European Union is rolling out its markets in crypto assets framework, setting new compliance standards. In Asia, approaches vary. Singapore encourages innovation, while China maintains strict bans. Security remains a moving target. The trillion-dollar security initiative is a strong step, but past incidents like the DAO hack and Parity wallet bug show that no system is invulnerable. As billions flow through Ethereum's smart contracts, the stakes rise. Ongoing audits, bug bounties, and community vigilance are vital, but risk can never be fully eliminated. A major strength for Ethereum is its adaptability. The community is resilient and innovative. Features like account abstraction, enabled by EIP 4337, let developers create smart wallets that automatically manage gas across multiple Layer 2 networks, improving user experience. Restaking-powered services could add billions in annual fees to Ethereum's ecosystem by 2026, fueling more growth. Network participation is booming. In the second quarter of 2025, Ethereum's unique addresses hit a record 17.4 million, an increase of over 70% in a year. Staked Ether has climbed to over 34 million, locking up nearly 30% of total supply and reducing liquid supply. This creates upward pressure on prices as demand outpaces supply. From an investment angle, the numbers are compelling. Ethereum-based investment products saw inflows of nearly $300 million last week alone, the highest since the 2024 U.S. presidential election. Over 7 weeks, net inflows have topped $1.5 billion, reflecting institutional confidence and expectations of more price growth. Large wallets have also surged by nearly 30% since last March, showing deep-pocketed investors are accumulating. Marcin Kazmierczak of Redstone notes that Ethereum offers a clearer investment case than most altcoins, serving as the backbone of programmable money and DeFi. As funds diversify beyond Bitcoin, Ethereum stands to benefit most. For those considering exposure, experts recommend monitoring technical signals. A sustained breakout above the 50-day moving average could push Ethereum toward $3,500 or higher. Network upgrades and spot ETFs could also help support prices, even if markets wobble. But caution is crucial. Volatility is a constant in crypto, and surprises like central bank moves or geopolitical crises can cause sharp swings. Sound risk management and ongoing education are essential for anyone in this space. Can Ethereum's rally last? The answer is a qualified yes, if the network keeps innovating, scaling, and attracting capital. But nothing is guaranteed. The next chapter will test Ethereum's ability to hold its lead against competitors and internal challenges. As Paul Howard from Winsent observes, positive sentiment and real technical progress are giving Ethereum an edge it hasn't enjoyed in years. For the eco-conscious, since Ethereum's shift to proof-of-stake, energy use has plunged by almost 100%. Ethereum is now among the greenest blockchains at scale, making it more attractive to environmentally minded investors. So what does this mean for you? Whether you're an investor, developer, or just curious, Ethereum's journey is a fascinating example of how global economics, technology, and regulation shape the future of finance. The key takeaway: serious institutional adoption is more than hype. BlackRock's billion-dollar bet and surging whale wallets show that smart money sees real value in Ethereum's ecosystem. As always, volatility is part of the game. Stay informed, manage risk, and keep an eye on both technical and fundamental trends. Now it's your turn. Will Ethereum reach new heights, or is a correction ahead? Share your thoughts in the comments. Don't forget to like, subscribe, and hit the notification bell for more deep dives into global tech and finance. Until next time,